G'day, Tom Garman, Sales Representative at Apex Results Realty, located in Burlington, Ontario. I operate from Grimsby through to West Mississauga. So, it is the 20th of April, Easter Sunday, and this is the market update. Right now, the market is not super hot. It is fast, it is definitely warm, it's getting close to hot. Okay, why? Interest rates, still low. Yes, the government and the different banking institutions in our region, in Canada period, have tightened up controls. You've seen CMHC fees are going up just a little bit, and they're qualifying you to a higher percentage, but you can still get a mortgage rate, 5-year fixed, for around 3%. It fluctuates up and down, 2.89 to 3.29%. Overall impact on what you pay in a month on, say, a $200,000 or $300,000 mortgage, not that high. So the market is still good. Next, listings. There are not enough listings on the market right now. If more properties hit the market in a glut in the next 2 weeks, so we increase the number of listings from, say, almost 600 to even just 800. Now, some of those will not be what everyone is looking for. You're looking at estates at that point. But what will happen is the additional properties mean people have more choice. So they will take more time, properties they like, instead of having 1 or 2 in a region that they like, or neighborhood rather, they would have 3, 4, or 5. So what will happen is more properties available, better choice, prices are not shooting up, people will not move into competition. I have had 3 listings since, I can't really count the first one, that was the beginning of February, and that was not run the way I would run a listing normally. But I have 2 listings where the sellers were sincere, everything was straightforward, they followed all my directions, both sold less than 48 hours. The first one, 26 hours after the listing paperwork was signed, after I hit upload. The second one, I had the listing paperwork in one hand, and I had the realtor's offer in the other. We signed, we sold. No finance condition, just review of a status certificate. It was a good price for an apartment, and it's already gone. I didn't even have to bring the photographer through for the virtual tour or a bunch of the other work. And my client got just about full price. So that's what we're looking at. I'm taking buyers out, looking at property. I really like this one. It's gone. Okay, so the person who's looking for higher end property, who's upsizing from a smaller house to a bigger one, looking at building a family, everything like that, just casually gone out. Nice property, gone quickly. The other person I'm taking out right now wants a solid house. Doesn't have to be perfect. It does not have to have granite or anything like that. Just looking for a solid house in a decent area, and we're seeing a lot. Most of those do not work, but we have a short list right now of 3 properties. And very shortly we're going out again, probably view another 6 or 7 properties. We're going to add another one to that short list. And what will happen is one of those 4 or 5 will have by that point will end up being sold, but others will still be there. So historically, going into this, what's happened in the past almost has no more impact anymore. The traditional spring market, summer market slow down, fall market picks up again, winter hits, it starts to slow down again, is not as consistent as it used to be. If I go back 10 years, if I go back 5 years, it would still do that. However, the government has been tightening controls up constantly, and that has shifted the market around a little bit. So it's no longer, you want to be listed in March. February is where your starters are trying. You know, I want to list now before anybody else is listed. There's always people buying. Perhaps I'll sell, and then I'll have more time to purchase something later. Not happening. Because of the bad weather this year as well, it pushed off the start of the spring market into March. Now, there were properties listing. People were looking and have been looking for a good while. I've met people who've been looking for a new home for 3 months with a realtor. And at the end of February, something came on the market. They walked in, the weather wasn't good, and they purchased it. Now, I have commented on this before. The only way the market is going to slow down is if the Canadian economy takes a major hit, or interest rates go shooting up, or there is some sort of massive uncertainty. Now, right now, the Canadian economy, not doing phenomenally, but it's doing well. If there's no one employer in an area anymore, it's not like Hamilton, downtown, the old Stelco or Dofasco concept, where if one were to go bankrupt, it would devastate the city. They have slowly scaled back. If you take a look at Ford, a good example is Ford in Oakville. People are driving in from Brantford to work in a car plant in Oakville. So if they cut back a little bit, it's not going to have an impact only in Oakville. It spreads out the total impact. Now, there are still large companies that employ a lot of local people. None of those are screaming. You don't hear anything major about that. They're still carrying on. Maybe they're not hiring people. So the economy or the local region or main supplier of employment for an area going belly up, having a major impact, not as much of a factor right now. That could be if interest rates shoot up, of course, or if deflation happens for luxury goods or anything, things that are not must-haves. So you need to be aware of that. Interest rates aren't going to be going anywhere. And if you do hear, again, like we've been hearing for the last 2.5, 3 years, better lock in your rate right now, they're going up. That's because they're going up from 2.99 to 3.09 or to 3.19, which in the big picture of life is not that much of an impact. When you qualify, you're not qualifying at 3%. You're qualifying at about 5% to make sure that you can afford it. So when rates go up a little bit, you still own your property. Now, what am I expecting for the near future? In the next few days, weeks, and even out to, say, 6 weeks, just over a month, I think we'll slowly see more properties coming on the market, more buyers going out, and it's going to push this out. You're going to have this market continue as it is, definitely warm. It may get hot. If more people do not list and the number of properties coming on the market slow, then 5 buyers go into that property and it's exactly what they want, you'll have competition. And the prices may end up going up higher faster. However, past that, I don't really see that happening. People are being a lot more cautious today. If you go further on, June, July, we may still have a spring market where it's booming along into July because there's more inventory always coming on the market and people are always looking to buy, and not everyone has to be in 30, 45, or 60 days. Some people are taking their time. Always what I recommend. In fact, I'm dealing with somebody right now who said, I'll keep an eye out. When the right property comes along, I can move on it. But I don't just want to throw myself into anything because anything's not right. Longer term, by year end, I expect we'll have seen a few fluctuations in the market. A small bubble or two will happen. There will be a bit of a price drop suddenly. The market's going to collapse again because the spring market will end. We'll hit the proper summer, even though that may be end of July, August, even into September. Fall market may be slower. It may boom along again. Don't know for sure, but I think we're going to see the normal cycle, which means there will be a slowdown over the summer, a little later, and the fall market may not be super hot. So going on, as long as interest rates stay this low, historically low, this is still going to go on. It's going to be an ongoing cycle until rates go up. So I'm going to guess, yes, and I'm guessing, there's no crystal ball, 2015 before you would really see any sort of change, maybe even a 2016. The government's talked about deflation. Inflation rates are too low. People stop buying luxury goods. People lose jobs. So as long as we have normal inflation, and as long as interest rates stay low, we're okay. If interest rates go up, I can see there being more changes. However, I'm not going to see that, aside from the media trying to spook us and talk about how overpriced everything is now. Interest rates are at this point, you're making so much money, you can afford to purchase this. If you can't, keep an eye out, change your neighborhood. Going further, do I see an overall collapse? No, I do not see a collapse. There will be an adjustment. If rates go up June 1st of this year, 2014, so your mortgage now, as you walk into the bank and you talk, I've talked to some other banks and so on, and they were offering me lower. Rates suddenly go up. You're not getting 3%, you're getting 5%, you're getting 6%. Those people who are not locked in are basically going to stop, step back, and wait. In a minor case, it'll be about a 3-month slowdown while prices adjust. So if it goes from 3 to 4%, you'll see prices come down a little bit, or they will stagnate. If they go to 6 or 7%, then the market will stop longer. And when I say stop, I do not mean no one purchases or sells or buys or anything like that. I mean that it will slow down. The average time on market will go from about 40 days right now, and that could go out to 120. People who need to sell, estate sales, being moved because of their employment or other important changes. I have to upsize my property because I've got more kids now, or they're hitting the teenage years. Well, that's going to have an impact. But generally, the only way to have anything change right now, there is no major economic collapse going on. That's all being ignored. The only way is if rates go up or the economy takes a pounding. Those two may go together. So my suggestion for yourself, since you can get a 5-year, a 7-year, or even a 10-year fixed rate, if you're a first-time home buyer, most people do not appreciate the variable rates because those are 3, 4, or 5-year term, and that may take you into a time of raising or increasing rates. Lock in. Get a 7-year term. Get a 10-year term. You will pay a higher interest rate. Figure out a way to generate extra income. Young couple, get a roommate. I know not most people don't like that, but there are options. Buy a less expensive house, or if you're a young couple and you like traveling, buy an apartment. Pay it off. Sell it eventually, and that will give you the collateral to move on. Anyway, that's it. I don't see any sort of major economic collapse coming. I see no real estate market collapse coming. You will see a lot of articles in the media about the overpriced property in Toronto and Vancouver and how these prices are unsustainable, and we should see a 30 or a 40% adjustment in price. However, 2 years ago, we're expecting a 25% decrease in the price of property in Toronto. Hasn't happened, not going to happen. Anyway, that's it. Take care of yourselves. Make sure you're prepared, ask the right questions before you go out and purchase. Make sure you got all your ducks lined up. Don't bother getting involved in multiple competition. It's a losing proposition. And on top of all of that, as you're looking, remember, always stay positive.